All right, everyone, welcome back to another episode of Carnivore Trades. Today is Friday, June 10th, 2022. If you're not done so already, you like the content, subscribe, give the video a thumbs up, comment. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, so this is the power of failed patterns. So what I've been saying the last week or so is, so long as you can hold this inside bar low on the spiders on a closing basis, you can still have it, an A kind of B, C move up. And, you can complete kind of a little bullish counter trend rally here. I said, as soon as you close below this, that is over with, and this market can get ugly very quickly. And you see, obviously that broke down yesterday, and we just gapped right down today and pretty much flushed for the first hour of trading. And interestingly enough, the market's already kind of off the lows a little bit here as we get into the 3 o'clock hour. Still an hour left of trading. We could get a panic flush into the close. It would not surprise me one bit. But you can see this area here. I said in the post yesterday, obviously I didn't get the video out to you yesterday, but I said in the post we're going to test 395 at a minimum here, and we gapped right down to 394.88. So we gapped right down to that level and we flushed out. I would have thought that there would have been, considering the gap down, I would have thought that we would have had some type of a waterfall sell-off today. And you can see the volume really isn't that heavy. So it's just very odd. It's like the market's almost surprised by this CPI print. And it's like, the market's acting like it's surprised, but it shouldn't be surprised, right? And we know inflation was high. We knew the number was going to come in hot. Even the White House said to expect the number to be elevated. And we only have 86 million shares traded here on the spiders at about 3 p.m. So just some strange stuff going on here. But again, bottom line, that is the power of failed patterns. And, we've stalled out a little bit here. And I think the market, now that the CPI number is out of the way, we now have the Fed to look forward to next week, and we have quad witching OPEX. So right now, I wouldn't put it past the market to really just kind of pause Monday, Tuesday, now that we have the CPI out of the way. And it's really just all about the Fed at this point. The market is now priced in a mega hawkish Fed. So the bull case is that the Fed is just normal hawkish or on the dovish side. And I think that would probably give the market some good relief here, as the market is now priced in the worst. But obviously the logical case here would be the Fed is more hawkish. So if that does happen, I wouldn't rule out a waterfall sell-off. I really wouldn't here. The only thing is, it's very odd for some type of waterfall selling or major selling to happen during an OPEX week, especially a quad witch. So it's a really tough call here. And right now we're in very much almost all cash at this point. And I think that's the right place to be here going into next week. There's just too much uncertainty out there. And I mean, we had a nice move up. He had a beautiful bullish pattern here, and that failed. And, now we're gapping down on light volume, and now we're even coming off the lows a little bit here intraday. It's just there's no continuity here in any of the moves. Everything's a rug pull. We talked about that last week. Every time we get a move up, the rug gets pulled, and then we move down and the rug gets pulled. So very choppy market and very, very tough to trade. Don't get married to any one thing, and don't fall in love with a breakout or a breakdown, as this market's proved time and time again that it can change on a dime. So anyways, here, let's take a look at a few sectors here. So basically, the SPY testing this breakout area, and you can see it really across the board in everything. So triple Qs, that's where you went down here to that 290 area. This was your breakout bar, and you really just, or your reversal bar rather, and you're basically just testing that area. Russell 2000 here, IWM. So this is kind of that area that you couldn't get through here, and then you had that surge, filled that gap, and now you're getting a little bit of a bounce. So that's going to be the area to look for that to hold next week. Semiconductor, same thing. So this is your reversal here, right there. You're going right into that green bar as well. IGV, cloud software. Again, notice this kind of resistance area you couldn't get through. You get a gap down here, then you were stuck below this 280-ish area for pretty much 2-3 weeks. You had a nice gap down, and now you're kind of just testing that area again. So again, and some of this could be, I think a lot of it is gamma related. given the fact that we were range bound for the last week and a half. So who knows, maybe Monday we gap up and come off the lows, once the Friday OPEX is done for the week. And by gap up, I don't mean gap up like 5%. I mean like a small gap up. But anyways, you're holding this area here, and that's really the bottom line at this point. Dow transports have been weaker. They've been on the weaker side. So basically getting back down to this tail candle here and testing that area. You got through that reversal bar now, but it is off the lows just like everything else. But again, Dow transports on the weaker side. 10-year here. So this was up big today. Up 3.68% here, a big move for the 10-year, basically back into double top. I'm still not in the camp that yields are ready to break out, although I could be wrong about that. I still think they're probably going to have to do more backing and filling. And like I said, it's very interesting. It's like yields are acting like we didn't expect a high inflation print today with this surge. It's like, okay, we knew it was going to be hot, and like why are we popping now? It just doesn't really make much sense to me. So now you're into double top. Maybe it could be a bit of a fake out here. That's always possible. The one thing that is noteworthy today is that the 30-year is not up nearly as much, only up 79 basis points. And that is not helping financials as the yield curve is flattening here. So you can see XLF, again, on the weaker side, basically back to 52-week lows, very close to 52-week lows. Whereas you look at, we said IGV, that's well off the lows still. The Russell is still well off the lows. The triple Qs are still off the lows. But XLF getting hit a lot harder. High yield debt here also making 52-week lows. So the yield curve flattening out is obviously a very negative sign here for the market. And again, we talked about, discretionary spending and so on and so forth, that taking a hit. So it's looking more and more like we're headed for recession if we're not already in one. But anyways, that is the case there for yields. So we looked at fins, the XLF here. There's broker dealers as well, basically just off of new 52-week lows. And really it's, you got this little tail candle there. And after that, there's a lot of real estate to the downside on broker dealers. So if you look at a monthly, I mean, there's really nothing here until basically the pre-pandemic high. And that's what happens when you don't, you just push higher every day and you don't put any supports. The market can come down just as fast as it went up. So be aware of that there with XBD. Anyways, energy here, relatively quiet. So crude actually backed off a little bit, even with the high inflation print. Some of that may be just due to the market expecting the Fed to raise rates more aggressively, which could cause demand destruction. That's always possible. But crude remains to hold up, continues to hold up here. It's into this pivot. We'll see if it starts consolidating. If it starts going sideways for long enough, it could get through that. So beware of that. But for right now, relatively a quiet day there for crude. XLE here, pulling back a little bit, nothing crazy. XOP down a few points and OIH down a little bit more. Now remember, if we do start waterfall selling, these things will all come in. I don't care how great the fundamentals for Chevron is. They're going to come in because the margin selling will take over and everything will come in. That's why I say don't chase energy here. If you want to own it, you'll get a chance to own it, I promise. But wait for a correction first. I've seen that happen so many times where people chasing the highs because, Kramer and everybody on CNBC is telling you to buy energy. And, meanwhile, it's making new 52-week highs every single day. It's just the wrong way to do it. That's FOMO. That's, it's just undisciplined. Anyways, nat gas down 2%, which is basically nothing for nat gas at this point. Still inside of yesterday's kind of reversal candle. This is an amazing move here, by the way. 970 down to basically $8 in, 2 days, less than really 2 days. Here on nat gas, look at the volatility in this, but it's still holding up, holding trend above all 4 moving averages. And again, I still think this has a good shot to get above $10 before having any sort of notable type of pullback here. But nat gas holding up here, and we've got to respect that. Dollar index, again, kind of behaving like yields here. So getting a surge here with the CPI print. Again, expectations of Fed hiking. And again, just acting as if it wasn't really already something the market expected. So a little strange to see that. We're also seeing gold up here with the stronger dollar, but this is more of an uncertainty play. That this makes total sense to me, actually. So this is actually, it looks like it's taking out that pivot. And this has got good volume behind it too. Very close to this pivot here. So 1878.6, 1879. So yeah, so we just took out that pivot nominally on spot gold, so we did make a higher high here. And you know, again, no surprise, it's a safety play, it's an uncertainty play. And if there's one thing that I am certain about, it is there's uncertainty in this market. Like I said earlier, you know, you don't want to be in too many positions right now. There's no clarity, there's no real there's no solid trend. I mean, we know the trend is down here on the daily time frame, but the volatility is just so high here. It's just very hard to trade this market right now. But in any case, here moving on to silver. So this one also getting a bit of a bid here, acting a little bit more like a monetary and uncertainty metal right now, as some of the other metals have come in today. As you can see here, copper also coming down, platinum coming back in, but it's basically flat right now, and palladium also lower. So some of the metals that are more industrial sided are coming back in, whereas silver is acting a little bit more like a monetary metal. So that's a good thing for silver. Copper here specifically, you know, basically testing this breakout area. You know, I mean, look at this. It erased that entire surge from last week. That 5.5% surge is now gone. And that could be, again, you know, the market trying to price in an inverted yield curve and price in more Fed hiking, leading to demand destruction and so on. So again, it's just one day. We'll have to see a little bit more here, but that does look to be the case, at least at the moment. And then here with Bitcoin, same thing as the spiders, you know, so I told you guys this level here, 29,295, spot 86, you close below that, and you can pretty much kiss Bitcoin goodbye. Now it is, you know, believe it or not, it's actually not selling off as much as I thought it would have, but it is lower with everything else. And again, losing that inside bar, that breakout, I do not like that. It would not surprise me if we go down here and test some of these tail candle, or this tail candle area here, maybe 25, 26,000, and then, you know, basically double bottom, which is all the way down to 24,000 there on Bitcoin. So we'll see what it does here. Again, liquidity will dry up over the weekend. We'll see if it holds up over the weekend. But again, this is going to be moved around by the Fed. You see Ether there in a much weaker technical position here. That really lost that green bar low last week. But again, making new 52-week lows here on Ether. This is actually taken out the tail candle lows. So Bitcoin is really the only strong one right now, which makes sense as it is best of breed. But obviously, we'll have to continue to see a little bit more next week after the Fed and after OPEX. All right, anyway, so it looks like spiders are, yeah, coming off the lows here a little bit. We had kind of a rounded bottom here intraday. Very strange session. And that's why I say, like, even with this gap down, you know, this is a brutal breakdown pattern here. You'd think that we would really start to, you know, maybe panic would set in here. Look at the VIX today. You know, it was up, but look how well off the highs it is. So very just strange price action. And that's why I say it's like the market initially wasn't expecting this type of inflation number, but it should have been. And that's why I just don't trust this move really at all. Very neutral right now on the market, but I also wouldn't rule anything out, and especially with OPEX next week, really anything can happen. All right, guys, anyways, come find me on carnivoretrades.com. Be safe out there in this market, and you guys have a good weekend, and I will talk to you all next week.